Joining us for more is Peter McGuire from XM in Singapore. Pete, great to catch up with you to start the week. Well, let's in fact take a look back at that quarter just gone. How would you sum it up?
Well, I'll tell you what, Andrew, I think, and good morning, the first 2 months were fairly strong. When you're looking at July and August, I thought it was, really showtime. It really put, I think, capped the icing on the cake, considering where the first 8 months of the year went with equity markets. And then naturally, that last month of September was a little bit of in the doldrums. Interest rates continued to tick higher. Energy prices really boomed, the best part of about 30% up over that quarter. So that's another side of it. And the US dollar's been, 106, 106.50 as far as that index. So currencies have been crushed, and certainly US dollars really reign supreme.
Yeah, as you mentioned, the US dollar, that strength, maintaining that strength, and essentially, I guess, also a reflection of that resilience we're seeing more broadly in the US economy at the moment.
Yeah, exactly. It's been unemployment numbers have been continued to be fairly strong, and we've got non-farm payrolls again this Friday, and it's defied logic. The consumer is really, don't bet against the US consumer, as they say, Andrew. And the overall theme, I think, in the States has been fairly strong over that summer period. Where we roll into, the last quarter, that could be a little bit more challenging, but we've just got to wait and see how the Fed move, and of course, sentiment, and also we've now kicked the can down the road for 45 days with Kevin McCarthy as Speaker, and to avert any shutdown of government.
Yeah, until at least mid-November, and then they start that process all over again. Pete,
Yeah.
of course, expectations now pretty much set that interest rates will remain higher for longer. How's that been reflected in terms of those bond yields?
Well, they've really ticked up. And I mean, when you think about it, Andrew, we're at 2006, 2007 levels for the 2 and the 10 year in the States, and they've just been almighty and very, very, I think, more momentum even to the upside yet. So they could even tick higher, in this quarter. We've just got to wait and see. And there's the chart that tells a story. And, it's been very dynamic. And that's also, of course, naturally taken that US dollar for a big ride. And that's been, the trade, I think, over the last probably month and a half, strong dollar. And really, it's got probably further to go yet.
Yeah, Pete, where are you seeing, and particularly given how elevated those bond yields are at the moment, how that's affecting in particular commodities? You only have to look at gold, which has been under extreme pressure recently.
Yeah, gold got crushed. There's no doubting that. The other day, 1860, 1870 sort of handle, and silver as well. And a lot of the base metals have really come under big pressure. So there's the first part. The only commodity, well, one of the only commodities that's really shined has been certainly oil and energy sector. But yes, a lot of those other markets have really come under the pump, and it's been very, very, it's been great to be short. But yeah, if you're holding physical stock or physical gold, I should say, then that's a different matter. But many traders have been short on the technicals. So it's been plenty of volatility over the last couple of weeks.
So, Pete, you mentioned oil there. What are your expectations, given obviously those OPEC Plus members, particularly Saudi Arabia, Russia, extending those supply cuts to the end of the year?
Yeah, exactly, Andrew. I fly out tonight for Abu Dhabi. The largest oil conference in the world will be at OPEC tomorrow in Abu Dhabi, and it'll be interesting to get the run of the street as far as where the hedge funds and where the big producers are thinking, because I think everyone's saying that you'll be probably through 100 very shortly, and many traders are saying 110 is achievable in this last quarter. So that's not a good sign for inflation, and there just seems to be a bit of a disconnect between OPEC Plus and the rest of the world, because the producers really want higher prices, and I know that Saudi and Russia do. So it's a knife edge as far as supply and demand, and we don't really want anything to come from left of field, which could greatly impact the price. Geopolitical shocks or weather outages or anything like that.
Pete, let's focus on what's going on locally. Of course, big decision tomorrow. Reserve Bank, although expectations it will leave interest rates on hold again. Although now perhaps there are forecasts that to November it may well lift rates again.
Yeah, 10% probability for tomorrow, Andrew, and that's where everyone's more or less, all the traders are, hanging their hats. I don't think we're going to see anything. But yes, very true. For November, that could be a Christmas surprise, which wouldn't go well or bode well for Christmas presents, and certainly for spending. And I know that the mortgage rates are really starting to hit, and you only sort of talk to young people coming off from fixed term to 2% up to 5% and 6%. So that's really impacting spending power and how much is in the wallet and the purse at the end of the month. And it's not a good sign for anyone that's holding debt.
Yeah, and of course, it's not only focused on inflation, also what's going on in the labour market, which remains very tight.
Well, exactly. I mean, anyone that wants a job gets a job, and it's so we're at record numbers as far as unemployment. It's very, very strong, and that's a good sign. And the other thing, of course, is that as interest rates start to ratchet up, do we see uh, more incidents of companies that can't perform under the weight of debt, and all their sectors are being crushed. So yeah, it's a tough time, and it's going to be 24. I think is going to be a very interesting, not only domestically but certainly globally, as far as growth and growth forecasts.
All right, so all eyes obviously on the RBA decision tomorrow. The following day, we can focus on what's going on across the ditch with the RBNZ making its decision. Really interesting time, in fact, in New Zealand, because they're heading into that election too.
Yeah, exactly right. And again, they're on the same boat as us, 10% probability of a rate rise. So we don't see any movement there over for the RBNZ this week. But yes, very much so, leading into an election. And, you only got to see what's happened with their currency. It's really come under big pressure because of that stronger US dollar. And we were at 63 and a half, and now you're best part of, under 60. So it's really being hit pretty hard.